This podcast is brought to you by NextWave, strategy specialists and solutions for financial institutions. This is the London Fintech podcast, and today's episode is all about the world of crypto and stablecoin. This is a topical conversation at the time of this recording, which is July 2025, with Bitcoin at all-time highs, stablecoin volumes in the trillions, and LinkedIn chatter about the reinvention of finance on crypto rails. So today, I'm talking to Staci Warden, who's CEO of the Algorand Foundation, who are on a mission to create a borderless, friction-free economy. Algorand is an energy-efficient, quantum-secure, single-layer blockchain with instant finality, consistently high throughput, and low fees. Think decentralized finance, financial inclusion, data collection, fractional assets, supply chain, and payments. So Staci is going to help us understand all of that and Algorand's role in the crypto ecosystem. Welcome, Staci.
I'm so happy to be here. I'm very impressed that you had that whole thing memorized.
Lots to talk about. So Staci, where are you speaking from today?
I'm actually in New Hampshire now, trying to escape the sweltering heat of Washington, D.C.
And Washington's HQ for Algorand Foundation, is that right?
Yeah, we're a fully distributed company, though, so we are all over the globe. I'm the only person that is in DC, actually, but we have somebody in Baltimore, a couple folks on the East Coast, few folks on the West Coast, a bunch of people in Europe, Latin America. So we're all over the place.
Love that. That's the first TradFi slip up in this conversation right at the beginning, which is not only is this decentralized finance, this is decentralized organization as well.
Right.
So tell us a bit about you and your career journey leading up to the role leading Algorand.
So I have always been in finance. You know, I've worked in the public sector and the private sector. I was at JP Morgan, where I led the public sector practice for EMEA for 8 years. I was at the US Treasury Department for a couple of years. I was at the NASDAQ for a couple of years. After I left JP Morgan, I was JP Morgan in London. I came back to work for Mike Milken, who invented a large section of capital markets, the high yield credit markets in the 1970s. I worked for him for 8 years for the Milken Institute. I ran the Center for Finance and the Center for Global Development for him. And I was always concerned about I had a theory, which was that if households had a better way to invest their savings, then the private sector could access those savings. And if the private sector could access those savings and then grow, then the private sector would hire more people and households would have more savings. And that is the kind of virtuous circle to prosperity. So it's very much a private sector led model of economic growth. And to me, the way that, especially I've done a lot of work in developing countries and emerging markets, and I kept seeing that if households could only put their money in banks, then they're never going to get a good return on their savings. And so you need well-functioning capital markets, and you need efficient systems of payments, and you need financial inclusion, and small and medium-sized enterprises need access to capital. So this is kind of my North Star about how to generate prosperity. And one thing led to another. And I became more and more interested in crypto as a solution to many of those problems.
From that story, you've worked for some of the most prestigious and large-scale financial institutions. And I love that sort of flywheel of prosperity from financial inclusion model. Was there a particular tipping point at which you decided, right, I've got to get into the new ecosystem?
Right. So I had this very sweet gig at the Milken Institute where I had this idea that I failed completely miserably at this, but I had this idea that I was going to make the press more financially literate. So I would hold these lunches, and I partnered with the National Institute for the Press, and I would have lunch and I would find an expert in certain areas to talk to the press so that they would understand these. And so it was right after on the heels of the global financial crisis. So what I would do is I would bring experts in, like on housing finance reform, on, the GSEs, this kind of thing. And they requested that somebody speak about Bitcoin. And, this was a good gig for me because all I really did was serve lunch and do some intro comments, but there was nobody that knew anything about Bitcoin. This was in 2013. So I was like, okay, I guess I'm the lecturer on Bitcoin. So I remember I was having my little townhouse renovated. So I was living in this little 1-bedroom apartment, and I just kind of locked the doors and closed the shades and went down the rabbit hole for 5 days because I had to present on this. And so I really wanted to learn how the proof of work worked, like how it actually worked. And that lunch, sort of that thing went well. But then I thought, okay, I've done all of this work. I will write an article for the Milk Industry Review on it. And this article will be more technical than you typically get on crypto. Because at the time, I couldn't really find anything. I could find very high level things and very cryptographically heavy things. This is 2013. And so I tried to pitch like the middle, you know, not, not treating my audience like they couldn't understand, but really taking it through step by step. And this was the most downloaded article in the Milk Industry Review for like a couple of years. And so then I said, okay, well, I'm going to hold a panel on it at the Milk Industry Global Conference, this huge conference. And you're always fighting for rooms, if you blah, blah, blah. And I did not get a very good room. I got like a tier 2 room. And there was like a line outside the room trying to get into this room. And it was the second most downloaded. And so then the Milk Industry was like, okay, if you want to work on this here, I got some budget and I got some, and then it just kind of took off from there. And then, by the time DeFi summer came, I said, okay, you got to it was too hard for me to keep up with it as a side hustle. So that's when I said, I've got to do this full time or not at all. And then I joined the Algorand Foundation. First, I joined as a board member. I was headhunted to be on the board. And when you're headhunted to be on the board, you need to do a lot of due diligence because you're essentially lending your name to this organization. And I felt the same way about Algorand for the first time that I felt about Bitcoin when I understood Bitcoin. And I thought Bitcoin was going to be a solution to a lot of the problems that I faced. And it's not quite the solution to the problems that I thought it would be. But then I joined the Algorand board, and a few months later, they made me the CEO.
Yeah, it's a great story. So you you did your homework, but you did your homework 12 years ago and then market tested that through the institute and the presentation. So you really knew what you were getting into at that point. And it's a nice segue to what we're going to talk about in a minute, which I'd like to talk about, and so I can understand better, which is the whole world of stablecoins and the DeFi ecosystem that goes with it. But just before we dive into that, and I always ask guests this, what you do when you're off duty, when you're not leading Algorand Foundation, is there anything that's on your hobby list?
Okay, well, there is no greater delta than my interest in tennis and my ability to play tennis. So I am desperately always trying to improve my tennis game. So that is and I'm in New Hampshire now. So of course I enjoy hiking, and I just had friends up for the 4th weekend and we did a lot of hiking, played a lot of tennis, but tennis is my main, and I'm a good biker. So I like biking, and, I'm generally sort of an active person. But yeah, I keep trying to become a better tennis player too, with
There's
minimal
infinite
success, I will say.
potential for that pursuit. We have Wimbledon here in London, and you look at the level. Sort of, mere mortals are never going to get there. So you'll be able to indulge your tennis journey. I think for as long as you're able to still get onto the court, I imagine.
Now I actually can play the game, but when I was living in London, I was learning, and it was too expensive to hire, to get a court and to have a lesson. I mean, you can only play tennis in London if there's 4 of you, you play doubles, you split the court fee 4 ways, but as a beginner, it was virtually impossible there.
Yeah, and now there's paddle tennis taking off, and I've had 1 or 2 guests on the show who've put that at the top of their hobby list as well. But I've yet to try it. But it's somehow, I don't know, somehow to me it doesn't feel like it's the real thing. You spend a few years learning to actually try and play tennis properly. Why would I go back to the beginning and sort of do the easy version? But anyway, I remain to be convinced.
Pickleball is taking over the United States.
Oh, is it?
So,
Pickleball. Okay, there's something to look up after the conversation today. Before we jump right into today's episode, a quick thank you to our sponsor, NextWave. NextWave is an award-winning consultancy that is helping many of the world's leading banks, investment managers, and insurers deliver on their growth, efficiency, risk, and control goals and transform their businesses. With a senior team who have come from MD-level positions in major firms like HSBC, Barclays, and UBS, NextWave has both the deep industry expertise and the hands-on capabilities in AI, data, and automation to drive real results. More business outcomes and less PowerPoint from the consulting experience, as their clients like to say. NextWave has moved 2-week manual processes to 5-minute agentic automations, rescued global banking regulatory control programs, and digitized deal platforms, sustainability, and regulatory reporting systems. And they do much of this with hands-on engineering capabilities on leading technologies, which include ServiceNow, Alteryx, Quantexa, and Camunda. So if a modern and specialist alternative to the big brand consulting model sounds appealing, one which covers the full life cycle of strategy specialists and solutions, but with small practitioner teams, rapid delivery, and a better price point, then perhaps you should talk to NextWave. Visit nxwave.com to find out more and get in touch. That's nxwave.com. All right, let's get back to the episode. So, and for those of us coming into this conversation more from the traditional finance foundations, and that certainly includes me, I have done various things on token assets along the way with the consulting companies that I've been involved with, but never really sort of full mainstream on crypto. And this term stablecoins is increasingly in the headlines. So let's start there. What are they and why are they important, Steve?
So can I back up actually one step and just talk about money for a minute? So there are two kinds of money. One is cash and one is electronic bank money. And the thing about cash, the core difference between them is that when I give you $1, it's yours. Nobody asks you where it came from. Nobody asks how you got it. Possession is 10/10 of the law. I give you cash, you get the cash, it's your cash. Whereas if I write you a check for $10, my bank and your bank have to reconcile at the end of the day. There's a record keeping of my account. My bank debits from my account in a big batch file at the Fed. All of these batch files are reconciled and your bank credits you. It matters very much where that money comes from. My bank doesn't see that it has $10 in it. It will not give you the $10. That piece of paper is worthless. If I can reference the greatest Christmas movie of all time, and of course I do mean Die Hard, the reason that they wanted to get in, the reason that Alan Larkin wanted to get into that safe is because those bonds were bearer bonds. Once he had them, they were his. There was no bank associated. You couldn't make Die Hard now because there are no bearer bonds now. It's all electronic. What crypto is, and I tell people that are like, I'll never understand crypto. I say, if you understand this, you've understood 75% of it. Crypto is cash. It's digital cash. It's electronic cash, but it is cash. When I give you a Bitcoin, that Bitcoin is yours. Nobody cares where it came from. You own it and you have control over it. Okay. So this was like a huge revolution in money, actually. You can send a movie from Nigeria to Malaysia in a minute over WhatsApp, but you cannot send $10 from Nigeria to Malaysia because you have to travel through the correspondent banking system, clear at the Fed, travel back down through the correspondent bank. 10 days later, you might get the money and somebody's taken 5 to 10% off the top. So if you did that, you could send a Bitcoin immediately though, right? And so what stablecoins try to do is, how do you get on these crypto rails, these immediate ownership cash-like properties, but have dollars? And so stablecoins try to blend the two. So what you do is, you're a company and you decide you want to start a stablecoin. You issue stablecoin, you sell the stablecoin for dollars. So I say to you, I will mint you 10 stablecoin, you give me $10, and then I have a promise that is increasingly over time, I would say ironclad, that I will keep those $10 collateralized in an account somewhere. And then those representations of those $10 can go back and forth like cash, like digital cash. So the problem with cash is that, you have to be in the same room. The problem with electronic money is that you have to do all this reconciling through banks. Stablecoins is the cash is held there. Anytime you come back to me with a stablecoin, I say to you, I will give you your dollar back. But while it's trading around, it trades on these crypto rails, which give you immediate settlement and other kind of cash-like properties digitally.
So what makes them stable? And if I wanted to issue a stable coin, how would I do that such that my coin was indeed pegged to reserve currency and it was stable and it was, well, maybe you can tell us about compliance. I don't know quite what's out there, but let's start with the first question. How do you make it stable?
Right. So if I was going to issue Staci coin, I would have to credibly assert to you the following thing. When you give me a Staci coin, I will give you $1 back. That's the whole thing. So you're not going to buy you're not going to give me $1 and get a Staci US dollar, USDS we'll call it, if you're not sure you're going to get $1 back when you want it. So it is my job to credibly assert to you that you can have $1 back whenever you redeem a stable coin to me. It's the same thing when you go to banks. If you give me a bank a check, you want to make sure that you can always get your money back out when you do it. So, are a lot of people going to buy Staci coin? I don't think so, because I can't show that I have the money. The way for me to show that I have the money that I need to give you back when you demand it is to put it somewhere and very transparently show that it exists over there. So you see that checking account at JP Morgan? That has all of your money in it. I'll show you the bank statements. And so that when you want a Staci coin back, you can always, when you want $1 back, you can always, I can show you that I can take it out of my JP Morgan account and give it back to you. So Tether was the very first stable coin, and they didn't in the beginning do a very good job demonstrating that they had this collateral. It's called collateral, the money that you're keeping. They didn't do a very good job showing that they had it, but it turns out that people were making trades so quickly, and they didn't have access to traditional financial rails. Was very popular in developing countries, and people, didn't care so much that they couldn't see where this collateral was. There were people for years and years and years and years predicting the demise of Tether. It's going to depeg from the dollar. It's going to go down, because it was not showing where it was holding the collateral. But it hasn't depegged from the dollar, and it hasn't gone down, and it's still the most popular stablecoin. But USDC, Jeremy Allaire came along and said, okay, well, why don't we make a better, more institutionalized version of Tether? And we will show in a very clear and transparent way, we keep the dollars in these 9 different bank accounts. We have a money market fund that has the dollars. And they tried to give more comfort to the market, especially institutions, that they could back up those claims. But basically, it's a dollar that travels like crypto, which is why I kind of started with this money lecture. It's a dollar, but it travels on crypto rails, not banking rails. And I will tell you, Tony, this is a game changer for finance. Absolutely.
And this USDC, is that the Circle coin?
That's the Circle. Yep.
So more transparent, more perhaps locked up visibly and regularly audited, and all of those things to prove that there's
exactly.
resilience.
It's all right. Exactly. It's all about where is the collateral and can I see it? And you're not spending it on a vacation to Mexico, right? Like it's still there where you told me it was going to be. That's the idea.
And are there still new stable coins coming to market with frequency? I mean, there was a massive rush of initial coin offerings, a while back, and a lot of those just imploded. But what's happening in the stablecoin market?
So lots of stable coins are being generated now. And say I want to generate a new stable coin. Maybe I can't do it all. Like, how am I going to get a collateral banking relationship? How am I going to set it up? How am I, there's a lot. So as you can imagine, because crypto is a very entrepreneurial place, there are now platforms that you can use to help you launch your stablecoin. So there are big platforms that will do all of the regulatory work for you so that you can launch a stablecoin. So PayPal, for example, used one of these platforms to launch a stablecoin on PayPal. There are other platforms that just say, I will hold your collateral. I will help you mint it. I will do all the back office technology for you. And so the prediction, there's a kind of a bullish and a more slightly bearish prediction for stablecoins. But the bullish prediction is that every entity will have their own stablecoin. So and then maybe you're only going to use it for your back office operations, but maybe you'll use it for your ecosystem. So the United Nations, for example, is a candidate for potentially their own stablecoin because they have all kinds of different offices all over the world. They have lots of internal transfers from office type to office type. Why would they do that over banking rails when they could just have a stable coin internally to kind of help manage their liquidity? So they are proliferating is the short answer. And we expect more and more over time.
I think I spoke to one or two of the big banks around this, and a platform that cropped up, Fireblocks, I think it is. Some of the big institutions use. I don't know if you've come across that one, but I think that was an issuing platform and a regulated platform for building coins.
That's a custodial platform. So that is you're a big institution or you're a big holder. And now I have to tell you, the degen, the real crypto people, they keep their coins in a cold storage wallet that they control. But if you have lots and lots of money. You're an institution. You're not going to be able to say to your board, well, yeah, I have it in a cold storage wallet, and I keep it in my, under my mattress, my wallet. That's not going to fly. So you use an institutional custodian. Fireblocks is one of the well-known ones.
Yeah. Okay. And there's plenty of other names out there which I don't know anything about. Given that you get to this point, you've deployed your stablecoin on a secure platform. What else can you do on stablecoin rails beyond the obvious one, which is frictionless payment transfers?
Well, stablecoins, it's crypto, it's stablecoins on crypto rails to be, exactly precise about it. And so stablecoins on Algorand, for example, they are for payments, but what they allow is very up to the second collateral management, liquidity management, payments, programmable payments as well. So if this happens, release the payment. And this idea of programmable money, it sounds kind of fancy, but like, if I get the good, then release the stablecoin payment is a very, very interesting proposition, for example, in trade finance that can cut out a lot of these middlemen and discount notes around trade finance. So it's this combination of payments with immediate, Algorand has instant settlement, which means that there's no Swift necessary. There's no, all of this banking sector stuff goes away. When you make a payment with a stablecoin, it's instantly yours. I make a payment with stablecoin to you. We could do it right now and you would immediately have the money. And so it's this combination of payments, instant payments, and the potential for programmable payments, I think, is the really interesting thing about stablecoins.
And those concepts of sort of real-time lending and liquidity. So if you wanted to lend me some stable coins, that could be settled almost instantly. And if I wanted to give it back to you 5 minutes later with a fractional interest charge, then we could do that, right? And then you can't do that.
Totally, with no fee. Fees on Algorand are sub penny, right? It's just like no cost, absolutely instant, has high throughput. And so this is the kind of thing that, if you imagine can be, and now, there's different kinds of stable coins that are pretty interesting around yield bearing stable coins, for example, so you can earn money on your stablecoin holdings. But the important thing I would say about stablecoins is it is the second piece of the trade that happens with tokenized assets. So if you tokenize so there's an Aberdeen money market fund tokenized on Algorand, and that means that people can buy a piece of a money market fund, very small piece of a work of art, very small piece of a rental property. You could invest in a big rental building with lots of different rental apartments. You buy a small piece of it for say $50 and say the whole thing is worth, $5 million. You get your little tiny piece of the rental income from the whole building, the $50 worth of that rental income. Now that is not interesting unless you have stable coins as the other side of that leg. So you need tokenization combined with instant payments in order to make that work.
To exchange value. And I did a prototyping piece with Citi in 2017 on fractional assets, and it was just that. It was they called it Own It's, and it was fractional units on your holiday house or your wine collection or whatever it might be. And that was all on blockchain architecture. At the time, It wasn't clear. Yeah. Certainly within the scope of that piece of work, quite where the value exchange was going to be. But the concept of owning a tiny piece of something with some smart contracts that gave you entitlements to go and stay in the holiday home or to get a share of the rental income was a really strong one. And I think we're seeing that all happening now.
Yeah, they have one now with sort of very expensive cars, like, $300,000, $400,000 cars. And you get to drive it like once or whatever, maybe once a year. You can run this thing around a track, it's highly supervised or whatever. So, but you want your, if you're going to buy a regulated financial instrument, like say this Aberdeen money market fund, then you want you want your stablecoin also to be regulated, probably. So in this particular case, we use Quantos, which is regulated by the Dutch central bank. It's a stablecoin. It's a euro. It's a digital programmable euro, really. And so, but quite highly regulated. And if you buy the Aberdeen money market fund and you trade using Quantos based stablecoin, then that trade happens immediately. And the thing for There's a retail, I would say, proposition and an institutional proposition. The institutional proposition is that there's no counterparty risk, because that 3 days that you have to wait for settlement is very costly for you. You will have to put up collateral, or you will make your counterparty put up collateral while you are waiting for that trade to settle. And the name of the game is minimizing that cost of collateral. And so, but with instant finality, instant settlement, that huge amount of wastage goes out of the system. So it's billions and tens of billions of dollars of money that can be saved. And for the retail investor, it allows you to charge for very tiny amounts of things. So, these entrepreneurial women in developing countries, they charge for, 10 minutes of Wi-Fi or something like cell phone, use the cell phone for an hour. But if the cost of charging money is more expensive than the value of the thing, you're never going to do it. And you can imagine monetizing things to such small amounts that the buyer doesn't care. A website view that is a fraction of a penny, you're not even going to notice. But, if hundreds of thousands of people come to your website, that person will notice because they'll start earning money, but each user is not going to notice.
Yeah. And it's a separate conversation, but with the explosion of agentic AI interest, the crossover with you give your agents a token wallet to pay for things. I mean, there's a lot of firms looking at that as well, which is going to drive adoption. I guess my last question sort of on the ecosystem is just what's your perspective on the corporate take up of stablecoins? Because from what I've been reading, JP Morgan come out with coins, trying to have launch something big. This is at the time of this recording. So for anyone listens to this sort of next year, we're talking it's July 25, but there seems to be an almost exponential interest and growth in the sector right now.
Yeah, 100%. I mean, Stripe started allowing stablecoin payments in January, and the stablecoin volume on Stripe has grown 30% month on month every month. So just to give you an example, stablecoin volumes were like 15 trillion, I think, last year, which is more than Visa, a little bit more than Visa, right? We have a partnership with MasterCard for an immersive, so that it's called an immersive card, and with our Para wallet. So it's a Para wallet, Para card that allows you to spend your USDC directly from your owned self-custodial wallet on Algorand, and you can make stablecoin payments in this partnership with MasterCard on this MasterCard card. As you mentioned, JP Morgan stablecoin to help manage its back office organization. As much as Jamie Dimon goes out there and says, Bitcoin's a fraud, they're very blockchain forward and very stablecoin forward, I would say.
Yeah, and there's some folks that are in my network who work on the investment management side of the industry, the wealth side of the industry. And you look across that sector, it's a very diverse set of companies, some of which are still massively traditional. And folks that I know well, and maybe I'll get someone on this show at some point, are at Franklin Templeton. And they're on the other end of it, right? They're trusted nodes on various blockchain networks and are really future forward. But let's talk about Algorand Foundation, because otherwise we'll time out before we get to talk about your real day job. So tell us a bit more about Algorand and where that fits in this whole ecosystem.
Yeah, so Algorand is a blockchain. So we call it, in the industry, we call it a layer one. Algorand is the ledger where all transactions are recorded. And those ledgers are held up by computers. And those computers all over the world, the more computers you have, they're called nodes. The more nodes you have and the more geographically diverse those nodes are, the more decentralized is your ledger. If you're going to have a ledger that records every single transaction, you certainly don't want it owned by one or two computers, because then, me as the computer, owner, I can go and change and mess with the ledger. So you need lots of different computers, and they have to agree that the order of things is the order of things. And so we have a very, I would say, elegant way for that all of those computers agree. That's the differentiator with Algorand to every other blockchain. It's called the consensus mechanism, and kind of all the juice in blockchains is in the consensus mechanism. So if you want to have me back for a more technical version of this, I will explain how it works, but I will spare your audience for now. But it allows these computers to agree quickly and using properties of randomization, so that you never know kind of where, if you're going to attack the network, you never know like where to do it. So it's very It's very cryptographically kind of robust, and they reach a consensus very quickly. And when you make a transaction, it settles instantly. So some other blockchains have a different kind of, all other blockchains have a period of time before you make the transaction and the transaction settles. So this is kind of our USP, as they say. And so the core properties are that it can do about 10,000 transactions per second. It's very lightweight. It's very environmentally friendly, very low fees. And it has this property of instant finality. And there are lots of different kinds of companies built on it. There are decentralized finance companies building on it. So Folks Finance, I would say, is our biggest borrowing and lending platform. Tinyman is an automatic market maker based exchange. So you can trade without having to go to a central trade. There is a central exchange. There are, as I mentioned before, there's a property tokenization company building on Algorand. There are marketplaces for NFTs. Of course, we have meme coins as well as everybody else. We have a very interesting central order book kind of exchange that you can, where you can embed a decentralized exchange on your own platform in a kind of embedded finance way and get liquidity for your trading pairs in a very decentralized way. I mean, this gets a bit technical. So basically, it's a blockchain. Lots of people build on the blockchain. Lots of people use the blockchain. I can give you another interesting example in tokenization if you want. Which is that the Enel, which is the second largest, I think, or largest utility company in the world, Italian utility company, they decided that instead of encouraging people to put solar panels on their roofs, they said, well, why don't we build all the solar panels and we'll build them all in a sunny field over there? Because some people live on the fourth floor of an apartment building. Some people live in rainy areas, like they can't get solar. So we'll build all the solar panels and then sell tokens in those solar panels to our customers. And that's all on the Algorand blockchain. And then they can use the tokens to offset their electricity bills. So it's another example of kind of how you can use this tokenization that you've talked about before on a blockchain, and then because everybody has access to the ledger, everybody can kind of see what's going on with their own finances.
Yeah, I love that. And I think you've also got scientific data collection networks. You've got other things running on Algorand as well, if I'm right.
Yeah. So on payments, we do a lot in disaster relief. We do a lot in humanitarian aid payments. We are the major humanitarian aid payment into Afghanistan with a company called Hisab Pay. So they just did $64 million in electricity payments in Afghanistan, for example. And the value proposition there was, look at the ledger. You can see that we have been making payments only to those people that we said we were making payments to. This is what Hisab pays. We're not paying the Taliban. You can see, because it's on a blockchain, you can see where we're making payments. And it gives a lot of, dignity to the people in Afghanistan, that they don't have to stand in long lines to get cash aid, right? They can get a card. If they use a smartphone, they can use a smartphone. If they use a flip phone, they can use a flip phone. They can go, there's great videos where you go and you can just make a payment in a store. You can pay your electricity bill, especially for women that can't go outside on their own, sadly. So these sorts of things are very interesting. And in science, because you mentioned it, I will tell you a terrible story, an absolutely terrible story whereby, in fact, this founder of this company was called to be an expert witness against a researcher in a famous, I think, Boston hospital, actually, that he was trying to test a new drug for, I think it was Alzheimer's, but let's just say it's a tumor drug. And if the drug doesn't work and you take an MRI every month, you will see the tumor getting larger and larger and larger if the drug doesn't work. But he wanted to show that the drug worked. So he just flipped the MRI images and submitted them, showing the tumor getting smaller by flipping the temporal order of the MRI images. And he was eventually caught. And this founder was an expert witness to help catch him. And so this founder said, okay, well, why don't we partner with Algorand and Siemens, the MRI machine company? They build a lot of things, to timestamp every time an MRI is made and show it on the Algorand blockchain, so that when you take the image, it's now timestamped. So you can't mess around with it. You can't flip the order of it. You can't swap in and out of patients. You can't do nefarious things anymore. So it brings transparency to all kinds of activities, right? That's the other thing about the blockchain. You can always read what's going on it. Isn't that a terrible story, though? I think that's a terrible story.
It's a terrible story, but it's a great response. And I think part of the Algorand blockchain characteristics are, and again, I'm picking on things that I've seen on the website, it says it's quantum secure. That caught my eye. So I thought, how do you know? How can you say that?
Yeah. So we have to be very careful not to overstate that. So quantum security can come and needs to come, full quantum security needs to come from a variety of sources. Quantum secure wallets, quantum secure, call it a randomization beacon, all of that. That has not been solved yet. But the history of the transactions on the Algorand blockchain are quantum secure. And that is because we use and it's called a Falcon key, which has been shown to be quantum secure. So this is a US government approved. They did a big contest, all of these cryptographic researchers submitted these cryptographic keys, they're called. And then three authors won this contest. We used the key that they made. And using that key, we have been able to secure the history of the chain. And so every 15 minutes, and this is, I would argue the most important thing, so that nobody can go back and rewrite history and say, oh no, you didn't pay me, you have to pay me again, kind of thing. But it's not fully quantum secure because the current transactions are not securely, your wallet is not secure. So the wallet that holds your money is not yet quantum secure. So I want to just be careful not to overstate it. But the history of the chain is quantum secure.
Okay, great explanation. So, and just to talk about the foundation for a few minutes, am I right? Is Algorand Foundation not for profit? And
yeah.
And what's the purpose? What's the mission? I mean, I sort of gave a headline when I introed the conversation, but perhaps in your words, what is the work that the Algorand Foundation is doing, and what's
ultimately our job,
what's the plan?
Yeah. Well, ultimately, the ultimate plan is to go away, honestly. I mean, you want this blockchain to be self-sufficient, and you want it to be governed by the community. And so the foundation leads that project. So what we do is we try to encourage people to build on Algorand. We try to get partnerships for people to encourage the usage of Algorand. We run the governance process of the community governance process. So for example, the community gives away now all of the grants that the Algorand Foundation gives away. We leave that to the community to decide. And so we do these kinds of things, and and help come up with ways. So for example, without getting too technical, sometimes you have to incentivize these computers that I talked about earlier to uphold the security of this network. And so the foundation incentivizes these computers to uphold the security of the network as well. That's part of our job. And we have a plan to, over time, step back more and more and more, where this protocol, this blockchain, becomes self-sufficient and more owned and governed by the community. That's kind of what all blockchains at least purport to do. Some of these big VC heavy blockchains have stopped saying that they're going to do that. They don't care anymore. But there are a group of blockchains that are still very, very committed to the decentralization ethos. And so that's the kind of the longer term idea. But we basically try to just encourage usage on Algorand.
Does that mean that for your stablecoin, the algo, that's being used by the network participants purely for utility, so for payment and for the things we were talking about, but not for investment speculation? It's not expecting a Bitcoin style graph and folks speculating on the value, or do you find you still get a bit of both?
Well, the algo is not a stablecoin. The algo is, you can think of the algo as just a currency, and that currency has an exchange rate with a dollar that changes every day. Circle, who has USDC, they have to pick blockchains to put Circle on. And we were the second blockchain that Circle chose to put their USDC on. So the USDC on Algorand but there's also, Ethereum, Circle USDC on Ethereum. They have now a number of different chains, but we were very early. They picked us very early to be on Algorand. But the algo itself trades up and down, and the more the market perceives value, the more the algo will go up vis-a-vis the dollar. I will tell you, they mostly trade when Bitcoin does well, the other coins tend to do well, and when Bitcoin doesn't do well, the other coins tend not to do well.
Okay. And so you started talking about some of the partnerships that Algorand has done, and leading stable coins running on your blockchain, etc. I mean, are there some other examples that you'd call out of current initiatives that are sort of, I guess, pointing the way for the mainstream adoption of crypto
Well, I
infrastructure?
think so. Yeah, I mean, I think some of the ones that I've mentioned are pretty important. So I talked about Lofty AI, which is the property tokenization platform, and that's a really big one for us. And we're very excited about this Enel, example as well. We are taking you mentioned before, you mentioned agentic payments, and we think this is a really important growth opportunity for us because level 3 agents that have to make their own decisions, they're given a budget, they're given a objective function, and they're given a set of rules as to how they can achieve that objective function. They need to control their own money and they will never get bank accounts, right? So these level 3, these more sophisticated agents can only exist on crypto rails. And so as we continue to see improvements in these agents, that is going to have to be on a blockchain. And so we are quite active in kind of what is the software that we need to develop? What are the products that we need to develop around that to make sure that happens? But but that kind of payments, but payments in general are very important to us. I mentioned in Afghanistan, for example. We're also quite focused on identity. So this is one area that I haven't touched on. What a blockchain also enables you to do is not own just your own money and control your own money, but own and control your own information about yourself and carry that information around wherever you go. But if you can mess with that information, then nobody will believe you. But if you have it on a blockchain where you can't mess with it, the blockchain has deep integrity to it. So I can't fudge the numbers. I can't go back into the Excel spreadsheet and change a number if it's on a blockchain. So for example, if the DMV issues my license on the Algorand blockchain, then I can take every little piece of information in that driver's license and present it individually. Everybody will believe me because they can see that it came from the DMV. So I don't know if you have daughters, but if you have a daughter in the United States, goes to a bar and she's 22 years old, why does she have to show that bartender her home address? You don't want her showing that guy where she lives. She should just be able to show him that she's 22 and prove that she's 22 without even having to show him her birthday. Just and so be able to carry that around with you. So a big partnership we have on this, we have several others in the works, but a big one we have now is with the National Chess Federation, where if you win chess tournaments, you have those credentials of the tournaments that you won and who you beat in your identity. And so you can, when you go to other chess tournaments, you can show this is my ranking. This is what I got. This is on a blockchain. I couldn't change it to say that I won when actually I lost, right? It's a believable piece of information. We have another very interesting identity play with disaster relief payments in the United States. So you need money right away because your house has been flooded, but you can't get money right away because it's taxpayer money and you have to be very careful about fraud. This is always the problem. And so a company called the Care Wallet allows you to take a picture of yourself, take a picture of your driver's license, take a picture of your flooded living room. Immediately downloaded will come a list of things you can buy at Home Depot, a list of things you can buy on Amazon immediately. And then the fact that that has happened to you is on chain. And so if you try to double dip, you go to FEMA Texas, and then you also try to go to FEMA National can see that you've already been paid by FEMA Texas on the blockchain. So it gives everybody comfort that there's no fraud, but it allows you to get the things you need immediately. And so these kind of identity wallets are also a very important growth area for us.
Those are some great real world examples. I don't have daughters. I have two sons. They're not quite the age yet, 15 and 13, going to the pub. But
they shouldn't be in a pub at all, right?
They shouldn't, no. So I need a digital identity for a different reason to keep them out at this point.
Yeah. Exactly.
But I mean, it's going to be so interesting to see many of these things coming to the fore with the mainstream adoption that's clearly really happening across the sector at the moment. And just to sort of move it forward, because we're going to run out of time shortly. What do you see then as the future trends for the crypto space and also for Algorand and your next steps perhaps in all of this?
Well, I'm a little bit mad at you because you gave away my answer. I was going to talk about the agentic payments.
Ah,
But you mentioned it in the first 10 minutes. I said, oh man, that's not right. He did his homework.
I should do less research.
That's not very nice to do research. so, so I do think that's going to be a very important area. I also think, though, that finance, the traditional finance, has been very slow, not because they aren't interested, but because they're so interconnected that one can't move first without the other one also being in lockstep. You can't change the way that you interoperate together unless everybody moves together. And so they're kind of like inching forward in this very like uneven way right now. But when they all, when they reach a tipping point where, where traditional finance can run on stablecoin rails. And I think here's another prediction though. I think that stablecoins will be replaced actually by tokenized money market funds and tokenized mutual funds. Anything that earns a high yield that you can tokenize I think will eventually replace stablecoins because most stablecoins don't earn you any yield. So here's my woo-woo futuristic prediction. I will be able to take my little sliver of an Aberdeen money market fund and I will earn yield on it every minute, every minute, every minute, every minute. And then I will go into Starbucks and I will pay $25 for a latte at Starbucks or whatever it is. And I will as soon as I make that payment, then Starbucks will start earning the yield on that little slice of my Aberdeen money market fund because cash and assets, they're all assets. And so this idea that your money is not always every second working for you is in crypto, we think that's outrageous actually. And so the idea that you would always hold yield bearing assets, but they would be liquid and you would be able to treat them like money and you would be able to pay for things and yield would be continuous. It's continuous finance. I think that will be by the time your kids are in a pub drinking, I hope that that's the way that they're paying for their beers with a little tiny portion of their stock portfolio.
Yeah, well, that's brilliant and somewhat brain stretching prediction, particularly for those who are not living every day in the crypto and DeFi world. And what advice might you have for more sort of TradFi folks audience for this show who are, still in the traditional big finance world? Any thoughts and advice for that part of the audience?
Well, I don't give investment advice, as you can imagine.
No.
I try to stay away from that. But I think, well, one thing I would say is it's not as scary as you think, and it's not all hustlers and swindlers. There's a lot of really good things happening in the crypto ecosystem more broadly. And, and of course, I'm most familiar with Algorand, but, if you come to our website, there's and in fact, if you go to the website, canablockchaindothat.com, that will give you all kinds of real world examples as to how blockchain is transforming lives and how crypto and stablecoins are transforming lives globally. So start with kind of understanding the problems that blockchain can solve and go from there, I would say. And I highly recommend going to canablockchaindothat.com.
Like that. Can a blockchain do that? And we're seeing this in the AI space as well. It's education and literacy is the biggest barrier because it all seems a bit sort of future fantastic. And there's a new language, and particularly a new language in the crypto space when you start talking about proof of stake, proof of value, gas, and all sorts of phrases that, if you're not in that world, just really don't seem to mean anything. So I think there's quite an education barrier. So I love that suggestion. Well, what are you reading or listening to currently, Staci?
Oh, that's so funny because that's just what I was going to say. I think there's a terrific, I'm literally not reading it now. I've already read it, but if I could recommend one book to people, it's very readable. It's very good. And it's called Read, Write, Own. And it's by a guy named Chris Dixon, who is a managing partner at Andreessen Horowitz and has been in charge of their crypto practice. And Read, Write, Own, the title is the evolution of the internet. So in the internet phase one, all you did was read things, and then Facebook and Twitter and all of these social media platforms came along where you could actually write. You could have likes and make comments and interact. And own is the blockchain crypto third phase of the internet, where you actually own your own data and you are not beholden to these big behemoths in Web 2. And it's a very nice history of the internet and justification for why we should take blockchain very seriously as a technology.
Suggestion: read, write, own. So I've not read that, but it's going on the reading list. And if folks want to find out more about Algorand or about you directly, where do they go?
So I'm at Staci W_DC on Twitter, and we are at algorand.co is our website, and canablockchaindothat.com. And I'm also on LinkedIn, of course. And I have now stepped up my LinkedIn game thanks to some heavy-handed yelling at me from our PR agency about how I have to do better. So now there's good content. There's good content on there, Rachel. That's a shout out to you.
Yeah, well, look, I'd encourage you to keep sharing. I had this conversation with one of the guests that I had on a recent show who had so many interesting things to say, but never posts on LinkedIn. And I asked why, and he said, "Well, actually, I'm a bit too busy, and it's not my natural modus operandi. But my corporate really wants me to do more.
Yeah,
and
right.
It's sharing the good message. It's spreading the word."
Yeah. Right.
That's
I get a message. I get a message from Rachel every morning. Okay, what are you doing? What are you putting on LinkedIn today? Here's an idea,
academic on my network. Small shout out to Professor Joe Mahoney, who is a professor of consultancy at Cardiff, and he said to me, "I don't really write any papers for the university anymore. I publish, but I publish on LinkedIn." That's what we publish.
Right.
So
Where
yeah.
crypto convenes tends to be on Twitter. And of course, the developers are on Discord, and, Reddit's somewhat important too, but crypto tends to have its activity mostly on Twitter and I guess Telegram too.
Yeah. Yeah, brilliant. Well, we have run out of time. You've really shone a light on some very complicated subjects there. A couple of points where I thought you were wondering how technical to go, and you're right. I think we framed it exactly right. There could easily be a few spin-off conversations to dig into some of those topics, but you've made some very complicated and important things very clear. So hopefully the audience has got that, and I'm grateful for you spending the time with me today.
No, thank you so much, Ronnie. I really appreciate you. And I like the podcast, and it's an honor to have been invited to be on it.
Super. That's a great place to end it. For the audience who got this far, I hope you enjoyed it and learnt a lot. Please subscribe, like, and share, and we'll see you on the next episode.